Good example, welcome to Bhutan e-learning project. This lesson is revenue recognition for classes 11 to 12, key stage 5. In this lesson, we are going to learn revenue recognition. By the end of this lesson, you should be able to recognize how the revenues are considered or how the revenues are accounted in the business. This lesson is very simple, it's short, and you are going to learn how revenue is being recognized in the business. What is revenue then? Revenue refers to the income earned from the principal revenue producing activities, also known as operating activities of the enterprise or business. Examples are the net sales of goods and services, trading commission, etc. For financing company, it can be interest earned, it can be dividend earned, it can be service charges for arranging loans, etc. So for an automobile repair workshop, income generated from doing all those tasks by repairing of tire, by repairing of windshields, by doing denting and painting of the cars, by washing cars, whatever revenue, whatever money they earn by doing these tasks, it becomes a revenue for the car repair workshop. It becomes the revenue for car repair workshop. So net sales or the revenue is equals to total sales minus sales return. Total sales minus sales return. There are different ways of recognizing revenue. One method of recognizing revenue is using five-step module. There is five-step module for revenue recognition, and we will learn simplified one to recognize revenue in general business. So the five-step model applies to revenue earned from a customer or with a contract with the customers, with limited exceptions regardless of type of transactions or the industry. We are not going to talk about, or we are not going to learn about the contract modifications or warranties, etc. here. It is just going to be a simple five-step module to recognize revenue. These are the 5 steps to recognize revenue with the contract from customers. First step is step number 1, identify contract with a customer. Step number 1, identify contract with a customer. Step number 2, identify the performance obligation in the contract. Identify the performance obligation in the contract. Step number 3, determine the transaction price. Step number 3, determine the transaction price. Fourth step, after finishing determining the price of the transaction, the fourth step is to allocate the transaction price to the performance obligation in the contract. Fourth step, allocate the transaction price to the performance obligation in the contract. Fifth one is revenue. You recognize revenue when or as an entity satisfies a performance obligation. So last step is they are telling you recognize revenue when or as an entity satisfies a performance obligation. So fifth step says if the entity performs their performance obligation, then the revenue has to be recognized. Let us discuss this in detail now. Step number 1, it says identify the contract with the customer. Let's say here we are talking about identification of the contract with the customer. Now what is contract? First is what is contract? Contract can be a written form, in the form of written, in the form of verbal, or it can be in simply implied form. But it should or it must be legally enforceable. It must be legally enforceable. And contract should have a commercial substance and be approved by the parties to the contract. Commercial should have a commercial substance and be approved by the parties to the contract. I repeat, what is contract? Contract means it is a written, it can be a verbal, or it can be implied form. Contract with the customers can be in the form of written or verbal, or it can be implied form. It also says that the contract should be or must be legally enforceable. Then the contract between the business and the customer should have some commercial substance, and must be approved by the parties to the contract. The parties to the contract here will be the business entity and the customers. So agreement or the contract can be either oral, written, or verbal, or it can be implied also. So let us take some example now. Let us take an example. On 26th March 2020, Karma Tsongkang and Mr. Pema had a conversation over the phone to supply 24 numbers of HP laptop, including 25 numbers of headphones as a gift to Pema. The Karma Tsongkang will supply the goods to Pema on or before April 2nd, 2020. So these were the conditions in their contract, and both the parties agreed. Pema agreed to pay for the transactions, and then Karma also agreed to deliver the goods to Pema Tsongkang. Their contract was to deliver laptop and the headphones to Pema by Karma Tsongkang on or before 2nd April 2020. There will be 25 numbers of laptops, HP laptops, and 25 numbers of headphones. This is the contract between Karma Tsongkang and Mr. Pema. Karma Tsongkang is going to deliver 25 numbers of laptops along with 25 numbers of headphones to Mr. Pema on or before 2nd April 2020. So this is the contract between the customer and the business entity. Now see how we are going to recognize revenue for Karma Tsongkang. So first identification of the contract has been done. Now second step, they are telling identify the performance obligation in the contract. Performance obligation in the contract means what should be done by Karma Tsongkang to get revenue and what should be done by Mr. Pema to get the goods. So performance obligation from the Karma side is to give 25 laptops, 25 numbers of laptops to Karma Tsongkang, and the performance obligation of Mr. Pema is to pay the price for 25 numbers of HP laptop. So this is a virtual form. Performance obligation of Karma Tsongkang is to deliver 25 numbers of HP laptops and headphones to Mr. Pema, and the performance obligation of the customer, Mr. Pema, is to pay for the goods that is going to be supplied by Karma Tsongkang. This is the performance obligation of both the parties. One has to pay, one has to deliver. Next, third step in recognizing revenue is to determine the transaction price now. Now, they have already agreed on sale one Karma Tsongkang. They want to supply laptops and headphones to Pema. Third step is determine the transaction price. Determining the transaction price. The transaction between Pema and Karma Tsongkang is to deliver 25 numbers of HP laptops and headphones. Here, when you determine the transaction price, the entity requires to decide on what amount the goods should be sold. Step number 3, determine the transaction price. So in order to determine the transaction price, they are telling the transaction price is the amount of consideration that an entity accepts to be entitled to performance obligation. The amount excludes collected on behalf of third party, for example, government taxes. Here we are telling the amount excludes amounts collected on behalf of third party, for example, the government taxes. Here in our example, the HP laptop cost nil term 43,000 each and the headphone cost nil term 380 each. However, Karma Chongkang agreed to give at nil term 43,000 and free headphone each for each laptop. We have finished determining the price of transaction price. Here the transaction price is 43,000 at the moment. The transaction price is 43,000 at the moment, and the cost of headphone is excluded at this point of time. Step number 4, allocate the transaction price in the contract. Allocate the transaction price in the contract. Now here, allot transaction price to the separate performance obligation. The allocation is based on the relative stand-alone selling price of the goods and services promised and is made at the inception of the contract. It is not adjusted to reflect subsequent changes in the stand-alone selling price of the goods or services. Now, you have to do allocation now. Our contract was to deliver laptop and headphones. Now you have to segregate this transaction price into these two parts. What is the cost of headphones and what is the cost of HP laptop? So HP laptop is 43,000 and the price of headphone is 380. So this is how we allot the transaction price. Last one, the fifth step is recognize revenue when or as the entity satisfies a performance obligation. Here the entity is Karma Chongkang. Here the entity is Karma Chongkang. Now Karma Chongkang delivers all 25 numbers of headphones and all 25 numbers of HP laptop to Pema, Mr. Pema, on the mentioned date. So Pema, when he receives all these goods, how much will Pema pay and how much will be the revenue in the Karma Chongkang, or how much did Mr. Pema pay, and what is the revenue for Karma Chongkang? Now see, Karma Chongkang has delivered 25 numbers of HP laptop along with 25 numbers of headphones to Mr. Pema. Revenue in the books of Karma Chongkang. Now, when terms in the contract are fully met, here I mean to say Karma Chongkang has delivered all the goods as mentioned in the contract and Mr. Pema has paid everything with respect to the transaction. He has paid all the amount. So revenue in the Karma Chongkang will be 43,000 times 25. 43,000 times 25 because Karma Chongkang agreed to supply HP laptop and headphones at nil term 43,000. At nil term 43,000. So they sold 45 laptops along with the headphones, and then it is going to generate a revenue of 1,775,000. 1,075,000 will be revenue in the books of Karma Chongkang at the moment. So journal entry will be debit cash account 1,075,000, credit sales revenue 1,075,000. So in the narration you are going to write Karma Chongkang sold 25 numbers of HP laptop for cash and gave 25 numbers of headphones free, costing nil term 380 each. So this is when there is no breach of contract between Karma Chongkang and Mr. Pema. Next case, let's assume another case. Now Karma Chongkang delivers HP laptop only and did not deliver, he forgets to deliver headphones. We can also have a case like Karma Chongkang not delivering headphones while delivering HP laptops only. Let's assume this case and see how revenue recognition change or differs now. In the previous case, Karma has already given laptop, delivered laptop as well as headphones. Now in this case, Karma delivers only the laptop and he did not deliver the headphones. So if this is the case, what will be the revenue in the books of Karma? Now see, total price of the transaction is 1,775,000. Next, less 380 times 25 is 9,500. So revenue at this point of time in Karma Hong Kong should be less by 9,500, which is 1,065,500. So at the moment, Karma Hong Kong will record revenue as null term 1,065,500 only. Null term 9,500 will be recorded as revenue only when Karma Hong Kong delivers the remaining headphones to Mr. Pema. The performance obligation is not fully completed by Karma Hong Kong at the moment. So they are telling revenue is recognized only or as an entity satisfies the performance obligation. Here, Karma did not satisfy the performance obligation because Karma failed to deliver headphones. Revenue will not be added at the moment. Case 3, where Karma Hong Kong receives all the contract money but fails to deliver HP laptop and headphones on 2nd April and accountant prepares books of accounts. Now third case is Karma Hong Kong receives contract money. That means Pema has paid all the money to Karma Hong Kong, but Karma Hong Kong did not deliver both laptops and headphones to Mr. Pema, and the accountant is preparing the books of accounts. How are you going to recognize revenue here? Karma Hong Kong did not perform his performance obligation at the moment, so revenue will not be recognized at the moment. However, it will be accounted as earned revenue or income. However, it will be accounted as earned income or revenue. This is earned revenue because Karma Hong Kong has not yet incurred the expenses to earn this revenue. I am repeating, this is an earned revenue because Karma Hong Kong has not yet incurred expenses to earn this revenue. Or we can say at the moment it has created current liability to be fulfilled as soon as possible. That means Karma Hong Kong has already received the money. So Karma Hong Kong's duty is to now give headphones and laptops as mentioned in the contract. So therefore in this case 3, revenue will not be recognized as Karma Hong Kong did not fulfill the performance obligation. Now fourth case, where Karma Hong Kong delivered all the goods without any defect to Mr. Pema on 2nd April, but Pema fails to pay all the money for the transaction. How is the revenue considered in the books of Karma Hong Kong? Now opposite now here. You see, Karma Hong Kong has given everything. He has delivered laptop and he has delivered headphones without defects to Mr. Pema. Pema has also received the goods, but Pema did not pay the money to Karma Hong Kong. How are you going to recognize this revenue in the books of Karma Hong Kong? Since Karma Hong Kong had completely performed its performance obligation as per the contract, the revenue should be recognized at full price at the moment. However, as Mr. Pema did not pay the transaction price at the moment, it will be accounted as income earned but not received. I am repeating, since Karma has performed its performance obligation at the moment and he has done his part, and the fifth step says recognize revenue as the entity performs its performance obligation. So by following this criteria, Karma Hong Kong has performed all its performance obligation as per the contract. Therefore, revenue has to be recognized in the books of Karma Hong Kong despite not receiving cash at the moment. So therefore, this is considered as income earned. but not yet received. Why it is called as income earned? Because this, to make this many income, karma has already incurred the expenses. To generate that many income, karma has already incurred the expenses. Therefore, this income is called as income earned but not yet received. Payment has not paid at the moment, therefore it is called as income earned but not yet received. So on the basis of accrual accounting, or on accrual basis of accounting, revenue will be recognized at full value. So the entry will be debit accounts receivable Newton 1,075,000, credit sales account 1,075,000, being goods sold on credit. So this becomes a credit transaction to Karma Chongkang. Now Karma Chongkang has to show this as a credit sales and recognize revenue on that date only. Student activity. So this is the activity for the students. In 2011, Karma Mechanical sold an air conditioning AC unit for Newton 300,000, which included a service agreement to maintain the AC unit for 3 years, starting at the beginning of 2012. If sold separately, the AC unit would have sold for Newton 228,000 and the service agreement would have sold for Newton 72,000. The customer paid the full Newton 300,000 in 2011. December 31st, 2011, what amount would Karma Mechanical recognize as deferred revenue? Thank you and see you in my next lesson.